If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
All right. Good morning, everybody. Welcome back to another live stream. Hope you're all doing well and staying safe out there in these crazy markets. Had an interesting conversation yesterday. Posted on my story, posted on my Instagram tab, my Instagram story and my YouTube post tab. You guys might have seen it. Talking a little bit about how I had a commenter who was very adamant that this time is different. Gold is going to roll over and have a huge monumental crash. And I thought it would be a good discussion to start for the day because, again, I get these kinds of comments all the time. Your audio is wrong, dude. Okay, one sec. Let me just check. Thank you for saying that. Hold on.
How's that? Is that better? Thank you for that. It happens almost every other time, and it's totally random. But when I go home or when I'm streaming from home, for some reason, the mic just defaults to the other one, even though on my system, this is the default mic. It's really weird. Sounds good? Okay, cool. Thank you, guys. Yeah, thanks for letting me know. So anyways, where I was starting, basically, yesterday I had somebody comment and they did a very technical breakdown in the comment section as to why they believe gold is going to come down and that this time is different. And I'm not trying to pick on this person, but I'm not even kidding. I've lost count of how many times somebody has had a dissertation in the comment section about why gold should go down, only for gold to keep going up. Again, it's not a certainty thing that we're going to go up, but you have to understand that gold is going to do what it wants to do. And trying to call the top has been like the most difficult thing in the world to do with precious metals. When they are trending up, I mean, look at this on a yearly chart for a second, right? You take a look at the 12-month chart. You know, the downside in precious metals obviously happens. There's big down moves. But when it's in this kind of roller coaster upside move, look at that. It's just relentless until it decides it wants to come down. But for every, like, here's the thing, for every one person that calls this, right, that calls a larger scale drop in gold or in the NASDAQ, there are tens upon tens of thousands, hundreds of thousands of traders who get smacked calling the top. They say, oh, it's going to crash. It's going to crash. It's going to crash. It's going to crash. And this happens every single day. People comment over and over and over, gold's going to come down. And I think I know why. Like, here's my guess as to why people do that. Like, why do people constantly try to call for a crash on things? And what I think it is we as people, we as humans, we don't want to be fooled, right? We want to so desperately, we want to seek out the threat before it becomes a threat. And the irony of that is that by trying so desperately to seek out the threat, oh, it's going to crash on anybody who's buying, those same people actually are just cannon fodder to the uptrend. Isn't that just ironic? It's like by trying to make sure you don't get getting caught in the crash, most people just get caught as cannon fodder and the thing keeps going higher. Maybe that's a little harsh, but you know what I'm saying. Now, I'm not saying this like, oh, high and mighty, I've never made a mistake. Look, I have. I've totally tried to call tops and trends and bottoms and trends and got crushed doing it, right? I'm just telling you from experience, you get those comments all the time because there's always people who are new to markets and who, can't accept following trends. They must feel the need to fight them and call the tops and call the bottoms. And it's just more difficult, in my opinion, to try and do that. We have S&P 500, still kind of trading around here. Really quiet start to the year for the indices. However, Dow Jones, as OTT in the chat puts, we had a huge explosive breakout yesterday. All-time high for the Dow Jones. And we also had it, well, not an all-time high, but we had an explosive move yesterday in the Russell. Nice little move there to the upside on the Russell. I meant to trail my stops yesterday. I said I was going to do that, and I did not. So I will be trailing my stop loss today. In fact, I'm going to write that down so I do not forget. Hold on. Russell stop loss trail. Okay, I'll do that after the stream. It's not super urgent because it's, it's still far away distance. But yeah, so my point is, when it comes to markets, the trend is your friend until the end. That is the dumbest, simplest concept that people ignore for too long, right? The trend is your friend until the end. At some point, it's no longer your friend. At some point, you got to bail. At some point, what is an uptrend becomes a downtrend, and you have to change and adjust and admit you were wrong about something. But most traders do the opposite. They fight trends and they never admit they're wrong. If you could just pause everything and just listen to what I just said and rewire your brain a little bit, a lot of people would probably go from unprofitable to profitable. Let's say it again. A lot of people fight trends, macro and technical, and they never admit when they are wrong. A lot of us do it. Most people are not very good at admitting that they're wrong. Ask yourself very transparently, am I good at admitting I'm wrong in the markets? And if the answer is no, fix that, because the market will destroy you if you do not. Because again, if you're so gung-ho, if you're so sure that you're going to be right all the time, the market will humble us. It's like the ultimate humbling machine. My goodness. Trust me, I've been humbled many times where I had a big idea like, oh, I think, the Russell, here I am, I'm long on it. And I think I have a good reason to, but I know where I'll get out if I'm wrong. There's been several times in the last few years where I have thought that the Russell would have a bigger move to the upside than it did, and I was wrong several times. I still made money on the Russell in the last few years, but I had these big ideas. I thought that the Russell was going to really outperform the S&P 500 as the Fed cut interest rates, and it hasn't. I was wrong. But because I was able to admit I was wrong, I didn't lose a bunch of money, or I didn't, refuse to acknowledge what the market was telling me. And I was able to ride other great trends that started. Like I've been pretty predominantly long tech stocks for the last few years. And I am shifting a little bit here. I have new ideas that I do still think that the Russell could have an outperformance here. But if I'm wrong, I'll adjust. And that's really important. Update on the NZD USD trade? Yeah, let's do it. So I went long Kiwi dollar. How are we looking on Kiwi dollar today? We're looking okay. I went long on this one. I also think I might trim my stop loss, or I might have taken partials on this. I can check that in just a moment, but I might have taken partial profits on Kiwi dollar this morning as we tapped up into this region. But I do still think we have a little bit more upside here to maybe retest the high end of this. Technicals on the NZD USD currency pair look good to me. We have held at this 38.2 support zone. I really like this for further upside. Let's see, do we still have Kiwi dollar as a bullish setup on Edgefinder? Also, guys, gold shot up to the top of the list this morning. If I'm not, yes, we did. Gold shot up to the top of this list. I've got to talk to you guys about that. We will be covering gold, of course, in the live stream, as always. Also, I do have plans to, I want to try broaden out the live stream a little bit more this year. we have some incredible talent behind the scenes at A1 Trading that wants to step up to the plate and do more. And man, I'm thinking we could take the stream to new heights this year. Bitcoin getting a bullish reading? Okay. We'll keep an eye on that. Anyways, Kiwi dollar, is it still on the list? I don't know if it is. Let's see. NZD USD getting a neutral reading now. It's giving the trend to the downside there, though. I think that will actually flip back today, because what the trend does, it uses the trend filter is a really simple indicator. It uses a couple moving averages. We can actually just look at the A1 momentum indicator. See, we use the 3 and 14 on the daily time frame. So yeah, as this thing starts to break back into green territory, the trend filter on Edgefinder will go positive again if we can continue to advance north. So yeah. Got the Edgefinder this Black Friday. Loving it so far. Yeah, awesome. Love to hear it. Thank you for supporting our work and for getting yourself, I had a conversation. This is just a side note. It's going to sound salesy, but genuinely it's kind of cool. Somebody messaged in on our support line and they said, hey, I've been, I took a break from trading a few years back. I bought the Edgefinder like upon inception. And so they bought it years ago, right? And so they were like, I was just wondering if you could help me get my access restored. And so of course we did. We sent over the access, and they left like a super kind follow-up message, just letting us know that they were absolutely ecstatic about how they opened up Edgefinder. It had been some time. They dusted off the cobwebs of Edgefinder, and they found a golden egg, essentially, with what all the changes that Edgefinder had seen since they purchased it. And I thought that was really cool, because it's kind of like if you bought the Edgefinder a few years ago and then you woke up today and you're like, all right, let me check my Edgefinder, and it looks like 10 times more data, more value, more content within. And to me, that was cool, because it's like, obviously we work on it every single day. So changes are, small changes every day over a long time turn into huge changes for customers, which is, kind of the idea. But yeah, we will, that's kind of the concept. We continuously improve the tool and make it better over time, because we have a lot of people who use it. A lot of people give us great feedback to improve it, etc. Anyways, NZD USD, I still like the upside for this one. Let's just check on the dollar here this morning as well. And oil's also making a move. There's so much to do in this market right now. I do still think dollar has some potential to roll over a little bit here further. Wouldn't be surprised if, from a technical basis, yesterday's long wick on the top looks pretty bearish to me. Let's see if we can get some follow through to the downside there. I do think that dollar index, cooling jobs data, cooling inflation, to me signals further rate cuts and some bearishness in the dollar. So that's kind of my bias for now. It's also why I'm very bullish on gold. Let's take a look at gold together and see what we're at. Good afternoon. Thank you, A1 team, for all the free updates to Edgefinder. You're the best. They're going to keep coming. They're going to keep coming, because that's kind of the perk. If you buy the Edgefinder, it's a one-time payment, and then you get access to all the future updates without the price hikes. Even though the price does go up, people who paid for a product or paid early access or earlier as we've built the tool have seen the tool continue to get better without paying any additional fees. If you're interested in getting Edgefinder, if you want to set up a payment plan, get access for yourself, click the link here to speak directly to a member of our support staff. They can set you up with a payment plan. If the tool is too expensive for your current budget, message in. Let us know that you're interested in setting up a plan, and our team can set that up for you. So with that said, let's talk gold. So gold is my biggest position currently. I am obviously kind of watching this every day, but my next decision point for gold really is, I think we are probably headed back to the prior all-time high. We look like we're making a beeline for it. If we can get back to the all-time high, the question starts to come in, can we break through, right? You see gold making that push up, recapturing this big downward candle. Seems like a logical technical move here to me. Fundamentals make a lot of sense. The question then becomes, can we get this kind of break above the prior all-time high? Can we break into the 45-60 area? Now, if that happens, then what I do is I take my stop loss and I trail it further into profit. Well, I shouldn't say further. I trail it for the first time into profit. Technically, this trade still has risk on it. If this thing were to collapse back down and fail at support, which could happen, if it did happen, I could still take a loss on this for a controlled small loss. If this thing, however, can get above the prior all-time highs and close there, my plan will be to take this stop loss and to trail it behind structure. Okay. I do predominantly trade the daily time frame. So I am watching the daily chart to see if we can get some closes. And as long as we can get some sort of higher low or a breakout through those all-time highs, that will give me what I need to go ahead and lock in a stop loss further on this gold move. So just dropping it down really quick to the 4-hour time frame, we've had a really nice little breakout here through this consolidation low, which I really like to see, right? So you broke through there, we retested even briefly, and then we shot off of that level and continue to advance higher. So I do think you have the right price action here. Obviously, I think you could get some intraday pullbacks, but path of least resistance does seem to me that we are going to retest that 45.40 level, given the current price action and momentum. So I like it. I also noticed something on the gold COT data. We did get some fresh COT data here yesterday. We are still playing catch up with the government shutdown stuff, but we are very much closing the gap and almost back to up-to-date COT data. So check this out. Gold saw some interesting activity. We did see decreases in long contracts and decrease in short contracts, but overall they are still very bullish on gold as well as silver. Silver is also a long position for them, but noticeably it seems like institutions actually have a bigger exposure to gold, more of a bullish positioning to gold than they do on silver. In fact, on silver, they actually did a little bit more bearish activity. They closed a lot of longs and actually increased their short positions, 71% long. So of the two, I do kind of like gold more. I've said that a couple times on the show. I do lean towards the idea of staying long gold. Also noticed Japanese yen got a little bit of buying, which was interesting. We could take a look at some yen pairs at some point here. But yeah, I think that path of least resistance for gold, precious metals seem under accumulation despite being at highs. And I want to remind you guys, if you've watched for a while, then you've probably heard me say this before. But gold, you know, people like to think that institutions, what they'll do is they will buy before everybody else and they'll sell before everybody else, before the markets turn. But it's actually kind of interesting when you look at the COT data and extrapolate it back over time. Let's go back 36 months. 36 months ago, you know, gold was already starting to move up and institutions have been long. Look at this yellow line. So what you're looking at on the yellow line, guys, is the overall long percentage, right? So as a ratio, are they more long or are they more short? For years now, for years, institutions have been very net long on gold. And so I say this often in my videos recently. It's almost like retail traders are caught up trading the 5-minute and the 15-minute candle, and they're constantly chasing their tails, long gold, short gold. You know, they're making all these calls. Meanwhile, institutions have just parked and sat in gold. And it's like the most genius thing you could have done, right? So if you were just tracking institutions in the last few years, just imagine this. This actually might be a painful thought exercise, so please feel free to not listen if you don't want to, but think about this. For everyone who trades gold, and I know there's a lot of us, I trade gold, a lot of people trade gold. For gold traders, imagine if a couple years ago, you just saw that institutions were very long gold, you understood the macro, which is what they look at, by the way, institutional traders. If you listen to turn on Bloomberg, CNBC, where they interview these big fund managers, all they talk about is macro. They don't talk about technical patterns or support and resistance very much. I mean, they do a little bit, but they predominantly talk about the Fed, the economy, national debts. They talk about all these big picture things that drive markets. And so imagine with me for a second, years ago, if you just saw, okay, macro's very bullish for gold and institutions have a huge exposure to precious metal long, and you just bought and held, it's a painful experiment because it's like, why have we been messing around with the 5-minute candle when the obvious big money move has been just buy and sit in gold long for years. It's like the dumbest thing in the world, but think about the amount of money that gets spent whenever you buy and sell, buy and sell, buy and sell. The bid-ask spread costs you money. Commissions cost you money. Overnight swaps, etc. When you're trading on a CFD brokerage, it all costs you money to do all that activity. Meanwhile, institutions, they just probably bought gold futures, or they bought, gold reserves, GLD shares, etc., and have just sat in this monster move. Sometimes you wonder, like, what makes the pros, and sometimes it's keeping things really simple. So anyways, I'm not necessarily, I do hold some precious metals long term, but I'm also very active in the markets. I'm not saying, this is not always the right thing to do, just buy and hold. I'm just trying to point out the picture that institutions look at the big picture and they look at the macro and they ride stuff, whereas retail traders, the predominant retail trader, is trading the 5-minute time frame, the 15-minute candle, and they are trading every little move in gold, and probably would be better off just looking at the daily chart, the weekly chart, and looking at the big picture, seeing what institutions are doing and trying to catch a piece of the action on the big picture. I don't know. Anyways, I get the question all the time, Nick. I'm starting to get it. I get the idea that macro is really important. Fundamentals are really important. But how do I actually learn them? And how do I do it for free? And I got you covered. So we'll drop a link here in the chat. If you're not in our Telegram channel, it is completely free to join. And we post macro fundamental educational posts every single day about what is happening in markets right now, what is driving the Kiwi dollar, the gold market, the S&P 500, silver, oil. If this would be helpful to you, if you're like, okay, 2026, I want to be a macro trader. 2026, I want to be better at this stuff. I know it's important. I get it. I'm sold, but I'm scared of how much work it's going to be. Well, let us help you. And it's free to do. Join our Telegram channel. Take 2 minutes out of your day every day and read the updates from Alan or myself. We are posting content every day to our viewers here, as well as on the YouTube channel. Stay tuned, coming back to the show each day. But you can learn for free. You do not need to spend any money on a course. I can promise you, you can watch my videos. You can listen to the other commentators that come on to this live stream. You can read along with our Telegram channel. And by the end of 2026, or even by the first quarter of 2026, your skills in terms of the macro fundamentals could be game changed completely from where they are right now. So it's free to do. All you have to do is join us in the Telegram. So see you in there. Highly recommend. Again, takes 2 seconds to join so that you can start learning macro. It's what moves the markets, and it's what most people ignore. But you know who doesn't ignore macro? The big winners, right? The big fundamental analysts at hedge funds and banks, and the people who actually really are the big professionals in the game. Yeah, they care about macro. Speaking of macro, let's talk a little bit about where we are at with the dollar, where we're at with the markets here himself in terms of the economy. If we talk specifically, for example, about the state of inflation in the labor market. So if we look at inflation in the US is at 2.7%. This is not too far off from the Fed's target of 2%. But what does this entail? Well, inflation is still a little bit hot, but seems to at least be recently coming in lower than expectations. Your red line here, guys, this is expectations from economists, right? The blue bar is what actually has been showing up. So inflation has actually been coming in short. It's been coming in lower. That's a good thing. And that's part of the reason why people think, okay, well, if inflation is kind of cooling, if it's rolling over, the Fed may actually have the potential to cut interest rates. Why would they need to cut interest rates? Well, cutting interest rates essentially makes borrowing costs easier for everybody, businesses, consumers, etc. And businesses being able to borrow at lower rates, consumers borrowing at lower rates equates to people going out and spending money. It's a way to spur the economy into action. And so when we talk about the labor market, right, we know the labor market unemployment rate has been on the rise here in the US. The Fed is a little bit worried about this. They're saying unemployment is on the rise. Unemployment claims came in a little bit better here recently. We'll get some new data this week. But the jobs market in terms of new hires has been really lackluster. It's not been very, Not been very impressive. So when we look at the non-farm payroll, when we look at the ADP statistics, you can see that jobs growth is not super great right now. And it's been a downward trend for years. So people are, worried about this. The Fed is worried about this. And so the question is, can they cut interest rates? Well, the permission to cut interest rates comes largely from the state of inflation. If inflation cools, then they can cut rates. Okay. So that is where we want to understand the macro. So if inflation is cooling and they cut interest rates into an environment in which jobs are weak, what should we be bullish on? Let me ask you guys. Here's your question of the day. Given that jobs data is kind of weak and inflation is potentially cooling, what market tends to do well in this environment? Jobs data weakening, inflation softening, interest rate cuts potentially coming into the picture. What market tends to do well? Ta-da! Gold. So if you are somebody who's like, okay, cool, I had to really think through that. Let me show you something kind of cool. Jobs market data coming in a little bit soft, inflation data coming in cooler than expected. We just said that should equate to a gold bullish reading. Well, there it is. You can automate this stuff. You can automate a big chunk of your fundamental analysis. Let's go through it real quick, right? What do we say? Inflation cooling is good for gold. Why? Lower interest rates, more fiat currency printed into the system. Good for gold, right? Edgefinder automatically grabbed that data. So instead of doing this all in your head, which even I don't do it all in my head, even after doing this for years, I rely on my software. So inflation coming in soft is good for gold. The jobs market has some statistics that look good, some statistics that don't look so good. So we have a mixed bag here currently in the jobs market when we look at JOLTS jobs, ADP, unemployment rate, unemployment claims, NFP, et cetera. Then we have some other categories that we do have to still pay credence to. Institutions. Remember we said earlier, institutions are long gold. Okay, factor that in. Edgefinder did that, right? Seasonally, it's a good time of year where you typically see some strength for gold. Seasonality, factor that in. The trend is clearly to the upside on the daily time frame. Factor that in. You see what we just did there? Software automated looking at a collection of market moving factors and built a bias. Now, where some people will get this twisted is they'll say, okay, so gold has to go up now. No. Trading is all about probabilities. The Edgefinder stacks things to try and help us build a more conclusive overview, but there's no certainties in markets. Because if something happens where, China invades Taiwan or there's a big peace treaty signed suddenly, it's going to change everything, right? So nothing is certain in markets. We know that. But what we can do as traders is we can build bias, stacking many things in our favor to try and give ourselves the best possibility of finding a good trade. So even though gold is getting a very bullish reading, if I already do have a position on it, because again, I just outlined why I am bullish on gold and why the Edgefinder is, but I think the trade has already kind of left the station. So the risk to reward was really good over here. We also had some probabilities that we stacked in our favor through the new scenario back tests. Let me show you this. I've talked about this 1,700 times, but I think it's a really good point. So if we go to gold and we go to price spikes, we talk about gold dropping by 4% or more in a day. It gives us a forward-looking return profile that's pretty good for gold over the next 1 day, 1 week, 1 month, 6 months, 12 months. This has worked this time, right? It's not going to work every time, but this time, this has been really dead on. We had a really good 1 week forward-looking return after that big drop on gold. This is what the Edgefinder, as it continues to mature into a more and more advanced software, that's what this is for, to help us find edge, right? This is finding edge, looking at statistics. It doesn't guarantee anything. Nothing is ever guaranteed in markets. But the most intelligent thing we could do as traders is to stack things in our favor and have a probabilities-based decision-making strategy. Does that make sense? As someone who's using Edge Finder for a long time now, one of the best investments I've made. Thank you for the feedback. I appreciate it. We're never going to stop, man. Edge Finder is going to the moon in 2026. If you don't have a copy and you would like to set up a payment plan, we dropped a link earlier, but you can speak directly to our support team. We'll drop it one more time if you have any questions, if you want to explore the product, if you want to hear about our trials, etc. We'll drop the link here in the chat to where you can speak directly to our support team. One other thing, like I said, before I head out and pass the stream over to our next show host, Marco is up next. Don't go anywhere. He's coming. Also, make sure to join our Telegram channel. Like I said, it's a free way to learn macro fundamentals. The QR code can be found below my camera, or we'll also drop it in the live stream chat. Okay, guys, up next, you've got Marco's trading journey, going through some top setups he's watching in today's market. Stay tuned. He's up just after this. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the live stream. Hope everyone is doing well. There's a snowstorm here in my city, so it's pretty fun to go out. But we are at the charts, watching silver closely. I have a short position on silver. I have a long position on New Zealand dollar against the US dollar, and I have a long position on the Aussie dollar against the US dollar. Silver position is in drawdown, unfortunately, right now, or maybe fortunately for you if you are long or if you are long on gold. So what's happening? Seems like a bit of a risk-off situation over the weekend with US, Venezuela. Is it going to escalate? No one knows, but so far the market impact has been limited, I would say. The market impact has not been crazy. So silver is up. Continuing higher. Gold is moving higher as well. I unfortunately got trailed out of my position. So on gold, I'm looking to possibly re-enter because it just seems to be continuing with massive momentum, with massive strength, with no, let's say, sign of a pause. But I'm going to keep holding my silver position. So I don't plan on closing the silver short, because as long as we are below the all-time high, as long as we are below 84.03015, sorry about that, we should be good. So the short position should still be good, and we should still be in a sort of a bearish market. Okay, so that's what I'm seeing here. As far as these positions go, NZD-USD is in a little bit of a profit. I have trailed my stop loss on this. So if you're in the A1 Discord, you would get an update on this position. Of course, it was a signal as an entry, and now there was a update with the trailing of the stop loss. So the current stop loss, the original stop loss level was 0.569. New stop loss level is 0.57349. Okay, so that is the new level. We created sort of a new swing low, and I do plan on manually closing it around the 15th of January. So in like 9 days, in 9 days, I will most likely manually close this position because that was the game plan all from the beginning. One of the main reasons why I took this position was because the bank outlook for 2026 was bullish on the Aussie, bullish on the NZD. Usually the big banks load up on these positions at the sort of the beginning of the January or beginning of the year in January by the 15th of the month. So game plan, trailing the stop loss, and for now, manually closing it on the 15th. Aussie dollar seems to be continuing higher, seems to be doing pretty well. I have trailed my stop loss on this one as well. So the original stop loss was at 0.65636. Now the new stop loss is at 0.6655 right there. This is the stop loss level. So working pretty well. Aussie dollar by far the best position. Going at around 2.3 R. So yeah, super happy with this position. Aussie is very strong. I think the Aussie economy is doing pretty well. If we go to the economic heat map and we click on the Australia, yeah, I mean, more data is coming out better than expected. Then we had manufacturing PMIs, which changed the situation a bit. But still, most of the data is coming out better than expected as far as we can see right there. Okay? So, game plan is the same as for NZD-USD. Plan is to close it manually on the 15th. So, comment time. Let's see. As someone who is using Edge Finder for a long time now, it's one of the best investments I have made. Well, I would say the same thing. Edge Finder, absolute game changer of a tool, definitely worth it. And it gives us retail traders a way to compete with the professionals, because the professionals most of them are using Bloomberg. Bloomberg costs $25,000 every single year. That's absolutely not achievable for retail traders. So the Edge Finder gives us something to compete with the big guys. Okay, so it captures all of the numbers, presents them in a very simple to read format, and then you can use it to execute trading positions. So I would agree with you, and yeah, thank you very much for the feedback as well. I'm sure Nick is gonna appreciate it. Hi Marco, thoughts on Nvidia? Let's see. Nvidia. Did anything happen with Nvidia? Well, as far as I can tell, not really. I know there was the speech from the CEO, Jensen Huang. So Nvidia shares rose slightly in pre-market trading after CEO Jensen Huang revealed the new AI server system, tenfold cost reduction in AI model inference. Okay, I'm not sure what that means, but I'm guessing it was a bit positive, but not a huge reaction, I would say. Minimal reaction. What is a big reaction? This candle, this candle, this candle, this candle, this one, this one. So I'm not seeing a big reaction right here. As far as the stock market goes, if we look at the S&P and the NASDAQ, S&P is still trickling higher, very close to all-time highs, most likely gonna keep grinding higher. So the S&P will most likely keep doing this, but the NASDAQ seems to be slowing down a bit. So the NASDAQ seems to be really flat from, let's say, the 29th of October. We didn't have any movement. We didn't have any significant movement. So this looks super flat. There has been a clear rotation. If you have been following the US stock market, there has been a clear rotation out of technology stocks and into energy, healthcare, mining, stuff like that. So the NASDAQ definitely suffered. But yeah, I'm not going to be interested until we go back to all-time highs. So unless we go back to all-time highs, personally, I'm expecting more flat price action here. That's my forecast for the NASDAQ. So I need to see some money go back into the technology stock market or the technology sector, let's say. Just a second. Okay. Let me just check something with the news today. We're getting JOLTS job openings. No, sorry. So nothing today, but tomorrow we're getting the JOLTS job openings, which should be pretty important. So keep your eye out on the JOLTS job openings. Anyways, as far as the Nasdaq goes, all-time highs. I need to see all-time highs. I need to see the price break above this level. I'm not really looking to trade the S&P because I think the Nasdaq has more potential in 2026, more volatility, better movements, and the S&P doesn't look much healthier either. I think I saw the DAX is starting to recover a bit. Yeah, definitely. So the DAX actually is at all-time highs and looks pretty impulsive. Broke out of the flat range. Let's see what the Edge Finder thinks. Top setups. DAX. Neutral reading so far. Okay, so neutral reading so far. Maybe worth taking a buy setup. But again, we can also just retrace. So we can also just pull back from here, retrace, go back into the overall range. Not my favorite thing to see to trade right now. Nikkei looking a bit flat lately. Dow Jones trickling higher, so that the Dow, the Russell doesn't look so good, but the Dow looks in good shape. The Dow definitely looks good. Following a trend line, going higher, minimal pullbacks, respecting the 20 MA perfectly. So just touching that 20 MA and going higher looks pretty good. But as I told you, my main focus is on the Nasdaq. So if I'm going to do something, it's probably going to be on the Nasdaq. And I need to see money flow back into the tech stocks, back into this sector, and then we can get some all-time highs. That's what I'm personally waiting for. And just my analysis on NVIDIA looks flat. Looks flat. From the 31st of July, we haven't really moved anywhere. We have just kind of ranged around this level. So I personally am not interested to do anything on NVIDIA. Hello, Cycling Club. Hello, Joshua. I'm doing pretty well. Hope you're good. Silver is bullish on the Edge Finder. I think that is the case. Let's take a look. Bullish. Gold should be bullish as well. Let's see. Gold actually very bullish. So that's a pretty good reading. There are multiple reasons why I'm short on silver. The main reason, though, is that silver looks super parabolic, looks super crazy. This rejection candle was massive. And in January, you usually get rebalancing of the big portfolios. The big portfolios made a bunch of profits in silver in 2025. So now to rebalance their portfolio, they need to sell a lot of silver in January 2026. Should happen in January. We will see if it happens. But this is a play for not a crash. I'm not calling for a crash, but a bit of a correction, a bit of a pullback. Stop losses above the all-time highs. Maybe it happens, maybe it doesn't. Do you often have similar positions as Nick? Yeah, I have to say that I do, because first I'm looking at the Edge Finder. So we're most likely going to look at similar things. Second, the things that are in play at that moment, most traders are looking at similar things in that regard as well if you're a swing trader. So if you're a profitable swing trader, most likely your watch list is pretty similar as the other swing traders who are profitable as well. So our entries, take profits, and stop losses will most likely differ, but our general view and opinion on an asset will match, I think, 80% of the time, maybe even 90% of the time. I think it would have been better if you had waited for the all-time high, or at least the 80 barrier on silver before execution. I just saw this price action and it looked like Bitcoin in 2018, Bitcoin in 2021. It looked parabolic, it looked crazy, massive buying. So I wanted to take a stab at it. Small risk position. I'm not betting the house on this, but for me, it was worth taking a stab at it. And again, we can still go lower. But if we don't go lower, I have a stop loss. Protection is in. So we'll see what happens. Hi, Marco. With forecasts from big banks, is it more important to pay attention to when they change their beliefs rather than only the original forecasts? Well, with this specific forecast, they give a general view for the upcoming year. So if you did some work, did some research, you would notice that every single bank has a bullish, neutral, or bearish view for 2026 for a specific currency. And it just so happened that they were very bullish on the Aussie and kind of bullish on the New Zealand dollar as well, which fit the narrative, which fit my personal analysis. So it was worth taking a position. They are also very bearish on the pound, which I didn't want to touch. The pound for me is a bit mixed, and the pound actually appreciated in value. So if you had a sell position on the pound, it wouldn't have worked. So it's not a guarantee. It's not a 100% win rate. Now, I do want to take this time to mention the sponsor of today's video, which is going to be DNA Funded. So if you guys are looking to get a funded account, expand your trading capital, DNA Funded is definitely the best option. So they are ran by professionals. It's not a kid in a basement. There's a big broker behind this company. They're using TradeLocker for execution, which is, in my opinion, the best execution software out there because you can automatically calculate the lot size. Whereas with MetaTrader, you need to use the things like the FX position size calculator, which takes a lot of time. And with our code A1Live, so A1Live, you can get 25% off any challenge from DNA. So A1Live, 25% off any DNA funded challenge. I do have a personal 50K funded account, but I wanted to log in. It didn't let me in for some reason. Let me try to do it off screen again. So let's click login. The portal seems to be offline for now, but my trade locker is working and my equity is around, I think, 57.3 or 47.3 thousand. Okay. So I can't show you the account today because the portal is not working, but the challenge is still running, or the funded account is still running. I'm trying to get a payout. Edgefinder is amazing. I would agree. Edgefinder, absolutely a game changer, especially for us retail traders. There wasn't a tool that did anything close to the Edgefinder, and that was around, let's say, $1,000. Bloomberg terminal, 25,000. Reuters, I think it's 5,000 or something even crazier. I like how Marco just identifies as Nick now. Yeah, I'm basically Nick part 2 in these streams. What do you think about Ivan's trading style? I haven't checked his style out in detail, but I'm sure he's a great trader. I would just need to do a bit more research on his exact style, holding time, entry, stop loss, take profit, trades per week. So I just don't have enough data, but I'm sure that he's an amazing trader. Otherwise, he would not be in A1 trading because, again, Nick filters all of the traders. You guys only get the best ones, and he definitely wants the signals to be of high quality, and he doesn't want any pretend traders on there. So that's the whole point of A1, like a legit company in a world where there's mostly scams. I mean, with retail trading in general, it's 98% scams. With prop firms, it's 98% scams. With brokers, it's maybe 80% scams with brokers because they have started to get some regulation. But it's a very, very dangerous space, and A1 is here to clear things up and actually show you what works, actually show you the game, and show you that it's not a get-rich-quick scheme, but you can make some steady gains per year. We're not talking about 100% return per year. We're not talking about 60% return per year. We're talking about 15, 20, 25, 30. That's realistic. If you look at any successful trader in Market Wizards or let's say just online, or from a prop firm such as S&P Capital, over a sample size of 5 to 10 years, if they can make more than 30% per year on average, they're an absolutely amazing trader. The best trader in the world, Jim Simmons, made around 60% return per year in a period of, I think, 20 or 30 years. So the best guy in the world makes around 60% per year on average. That's what everyone is aiming to beat. And it's not 100%, it's not 150, it's not 200%. That's absolutely long-term not achievable. You may have a year where you make 150%, but it's going to be 1 in 10 years. Marco, how long have you been trading? I've been trading since 2021. Why do you think silver is a short? So I have a full breakdown of why I'm selling silver in the A1 Discord. So I already did a breakdown at the beginning of the stream, but if you want a full written breakdown, you can join the A1 Discord using my discount code Marco. Okay, so in the Discord, you get all of my trade signals, breakdowns, explanations, fundamental event breakdowns, and not just from me, but from most other traders as well. And you get the trading chat with other successful traders. So quick recap of why I'm shorting silver. Looks parabolic, looks like Bitcoin in 2018 and 2021. Massive rejection candle. I did my back testing, and if silver makes more than 100% in 1 year, usually the next year is bearish, and usually the January of the upcoming year is very bearish. Okay, that is what backtesting tells us. Look at all of the years where silver made 100% plus return. You'll see that the next year is not so good. And the final reason is that the big portfolios, they need to rebalance their silver holdings. So if silver makes 2x in 1 year, their holdings of silver double. So for the next year, they need to sell half of their silver to keep, let's say, 4.5% of silver in their portfolios. So it's called portfolio rebalancing. The big players, they need to sell a lot of silver, and they will most likely do it in January. Why hasn't the sell-off started yet? Well, it looks like there is still a bunch of demand on silver, so it's just continuing higher. Again, I don't have a 100% win rate. I actually have around 50 to 55% win rate. So some of my trades lose, some of them win. I never know which one is going to happen, but I know that the probabilities are that this trade has a positive reward to risk and that it's definitely worth taking. Hello, Bashi. Welcome. Long time no see. Happy New Year. Happy New Year to you as well. Happy New Year to everyone as well. Long on gold. Robohola, hello. Aussie Swiss, no kids in basements at A1. Thank you, Nick, you're the best. No worries. Marco, what about concerns for DNA? I make 20% every day. I did 30% for 3 years. I'm not talking about 1 year, 2 year, 3 years. I'm talking about 10 years. How many of you have been trading for 10 years? Probably no one. Me, myself, I haven't been trading for 10 years. From 21, it's 5 years now. So I'm talking about a 10-year track record. Okay, do some research, look at some traders online, go to DarwinX, go to the DarwinX platform, search up THA. He has, I think, a 12-year track record. You're going to see what the real performance looks like. Some call it losing money. I call it negative wealth accumulation. Well, that's a fancy spin on losing money. How do you calculate those returns per year? Because if you say 60%, in my mind, I'm thinking you get 60% for every 100 you invest. Help me out. Yeah, if you make 60% in 1 year, if you start the year with, let's say, 100,000, and if you make 60%, you should end the year with 160K, right? Pretty simple stuff. If you make 15%, you should end the year with 115,000 in your account. Okay. So there are traders who can do 100 to 200% a year, but maybe not every year. For example, Pat Neal and his group of traders, volume profiles and stuff, mega cool stuff, but they're world class. Yeah, but Patrick Neal does these percentages with crazy risk. So he only does these percentages for a competition, while with big funds of his own money or money from his clients, he's never gonna go crazy with the risk. So the 100%, the 200% is purely for competition purposes. For actual trading purposes, he risks a lot less, because in a competition, it's demo money. The money is not real, or it's a very, very small investment. Hello, Alan. Welcome to the stream. I'm not even 10 years old yet. Cycling Club is 4 years old, so you guys cannot even open a broker account. Why are you selling silver? Tom Hogard does like 300%. True Marker, it's a psychology thing. I think he's fearful to do that with his own capital. Yeah, so he's an amazing trader. Hands down, amazing trader. But even he mentioned, I actually watched the podcast with him, even he mentioned that he's not going to replicate that sort of risk management on a big money account. So it's only for a competition. Again, top guys in the world, top traders in the world, they do around maybe 20, 30, 40% per year on a sample size of 10 years. That's realistic, that is achievable, and it's extremely hard to make, extremely hard to make. The best guy in the world did 60% per year. Jim Simmons, a sample size, I think it's 20 or 30 years. So that's the best guy in the world. Okay. Let's see. For those of you wanting an explanation on silver, you can rewind the stream, I think 5 minutes. Yeah, just rewind it for 5 minutes, and I did a bit of a breakdown. Or if you're in the A1 Discord, there's a full written explanation of why I took this position. But I don't want to repeat myself. I want to do some more charts. So NZD going up a little bit, Aussie dollar continuing higher, which is great to see. SPX up on the day, which is nice. NASDAQ up on the day as well, but just cannot seem to catch a big bid, cannot seem to break into all-time highs for now. Gold continuing higher with a lot of momentum. Great to see. If we go back to the 20 EMA, I'll consider a buy position. I have a sort of an alert set. So if we pull back a bit, that would be great to try and re-enter my position. I got taken out by a couple of points. I'm not going to cry about it, but it's pretty tough to watch. So yeah, I got taken out by a couple of points. Price is continuing. At least the trend is continuing. That's pretty simple, pretty easy to trade. You just buy the dips, okay? Crypto is something I wanted to look at. Bitcoin started to go up a bit. So the top was 94,792, but we just cannot seem to continue going higher. So Bitcoin has stalled a bit. My game plan for Bitcoin is, unless we can go above 100K, I'm being patient. So I need to see Bitcoin go above 100K. Then it's game on. Ethereum, I'm not touching Ethereum until Bitcoin goes above 100K. For now, I'm considering this kind of as a crypto winter for me. So I just don't have any trades to place. I don't have anything to execute at this level right here. And to truth be honest, this looks flat. This looks super flat, super corrective, no real movement, not good. So crypto, not the best thing at this moment. So let's find the last thing for today. Just to mention, I'm closely watching the jolts tomorrow. Yeah, jolts and the Aussie CPI. So Aussie CPI, so Aussie inflation. ADP non-farm is not that important, but the jolts should be pretty important. And then we have NFP. Don't forget, Friday is NFP, very important number. Unemployment rate for the US, a very important number as well. So that's going to be on the radar. Let's see if we have another request as a last thing for today. Let's see. USD JPY. Let's see, USD JPY, we're going to take a look. As the last thing for today, has it approached the intervention zone? No. Just doing nothing in the last few days. On USD JPY, I'm planning on having a sell limit above 158 because it's an intervention level where the BOJ will most likely come in and sell a bunch of dollars, buy a bunch of yen, thus push the price lower. So that's what I'm watching on USD JPY. Hopefully it can happen, but unless we can go above 158, there's nothing for me to do. But I'm closely watching it. So that's about it from me. Thank you very much for watching. You can catch me every single day this week. You can also trade with me on Friday with the NFP print, which should be pretty volatile. I'll give you any updates on silver. I'm still holding my sell position. Good luck in the markets, and I will see you in the next live stream. So goodbye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.